Ladies and gentlemen, good day and welcome to Q2 and H1 FY2026 conference call of Kamat Hotels India. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on a touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you and over to you, ma'am.
Good afternoon, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations of Kamat Hotels India Limited. On behalf of the company and Valorum Advisors, I would like to thank you all for participating in the company's earnings conference call for the second quarter and first half of the financial year 2026. Before we begin, let me mention a short cautionary statement. Some of the statements made in today's earnings call may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's belief as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings call is purely to educate and bring awareness about the company's fundamental business and financial quarter under review. Now let me introduce you to the management participating with us in today's earnings call and hand it over to them for their opening remarks. We have with us Mr. Vishal Vitthal Kamat, Executive Director, Ms. Smita Nanda, Chief Financial Officer, and Mr. Nikhil Singh, Company Secretary and Compliance Officer. Without any delay, I request Mr. Vishal Kamat to start with his opening remarks. Thank you and over to you, sir.
Thank you, Purvangi ji. Namaskar, everyone. Welcome to our earnings call to discuss the results of the second quarter and the first half of the financial year. I'm sure many of you have already gone through it as it has already been made available on the stock exchange also. And this month, while Q2 has been generally a leaner period, this time our results have not been very supportive or encouraging because of various factors which we will get into further in terms of monsoon and other aspects. That said, we also have opened 5 hotels in this Q2, which are out of which is in Panchgani, Dwarka, Rishikesh, then we Porvorim in Goa, and also Hyderabad. So this has added approximately 280 rooms more. And now we are standing at today 24 operational properties along with 2,100 rooms across the country, not including the additional hotels to come and additional rooms in pipeline. These are just active. So that has been what we've done. Bhavnagar, which was to open, has been rescheduled for April due to some of the things are to be done by the owners. So as per them, so it got delayed. So overall, while our ARR has been better than last time's quarter, the occupancy levels have mainly fallen, because of which we see the dip in the revenue and overall performance. With this, I'd like to hand over the call to Smita ji so that we can elaborate more on all the questions that each one of you will have. Smita ji, please take everyone through the financial performance and then accordingly we can discuss. Thank you.
Namaskar, sir. Thank you. Thank you, everyone, and good afternoon. Let me brief upon the key performance highlights for the quarter and first half of the financial year 2026. On consolidated basis, the revenue for second quarter stood INR 75 crore, representing a decline of approximately 12% year-on-year basis. EBITDA for the quarter was INR 8 crore, lower by around 63% year-on-year basis, and EBITDA margin of 10.43%. At the profit after tax level, the company reported a loss of rupees 30 lakhs compared to profit of INR 8 crore in the corresponding quarter of the previous year. For the first time of the financial year 2026, consolidated revenue stood INR 158 crore, which was broadly flat year-on-year basis. EBITDA for the first half INR 26 crore, reflecting a decline of 28% year-on-year basis, with an EBITDA margin 16.41%. PAT for the period stood for 2 crores, translating to a net margin of 1.39%. With this, I conclude my remarks and request the moderator to open the floor for the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sudhir Bheda from Bheda Family Office. Please go ahead.
Yeah, sir, good afternoon. I will congratulate on the good investor presentation which you have been presenting quarter after quarter. But, sir, my question is, while you have given a lot of information, but the information which shareholder wants is why the quarter was so bad. So that is none of the slide it is given, the reasons and all factors which have led to this kind of performance. So I was very disappointed. So I decided to attend the call. So what are the factors that led to this kind of revenue decline?
So, Surajji, firstly, thank you very much for taking the trouble to come on the call. I will share with you all the reasons that basically we've had that this quarter has not been very good. Basically, on a console level, particularly our subsidiary companies, one is N-Hotel, which has the Shimla and Manali hotel. That basically due to the road washing away and the delayed time that because the devastation was very high, so the delayed time that it took for the roads to be made, our full quarter got washed out in the case of our N-Hotel hotel, where it affected both revenue and expenses because expenses we could not reduce, though we have got afterwards subsequently a 2-month waiver from our Manali owner in which rent was waived for 2 months. So that basically, but still it is still having a cost which we've had, and that is one of the reasons. The second other reason is that even Chandigarh, our subsidiary which is there, since it's a new hotel and the expenses which are there, it is in loss, which basically will get turned in the coming year. It's starting May, as a general practice, which we've mentioned before also. All new hotels which we open, we book the expenses. We don't capitalize the expenses because the comparative to our operation, the expenses are not so high. So we might as well book the expenses and have it in our MIS so that it puts some more pressure on our team to perform. This I've shared in the past also. And this is true with the hotels which have opened up new also, and this is the case of Chandigarh and these 5 new hotels which we have opened. But considering that in Q3 and Q4, Chandigarh already started doing well, we will have a turn in our new hotels also which will be there. They will also offset their opening expenses losses, and the Chandigarh also in the same manner. So one is our subsidiaries, our subsidiaries was a challenge. Secondly, the new hotel openings, that also has a burden of cost on us, staff and marketing and other expenses which are there, which has been Q2. And third also, sir, is basically we've had in general a weak Q2 in terms of revenue. So today, even if my expenses would have been managed, had I been able to have a better revenue, unfortunately this year the drop in monsoon has affected us primarily in Mumbai, being a large part of our business coming from Mumbai. It has particularly affected us in Mumbai and Maharashtra, Pune and Mumbai both. That there has been a drop in revenue. And because of the drop in revenue, in proportion, obviously the expenses are not elastic because our staff and other things, that is going to still remain. So the cost is kind of in line with what we should have done in terms of revenue. So that is also another reason that we've had, that overall the revenue has fallen in this last quarter. But with Q3, again, like I mentioned, it looks excellent in terms of its performance. And I think we'll be having a good Q3. One more other reason basically is that we've had a drop is also in Pune Orchid particularly, which is a subsidiary of ours, OHPPL. As we speak, renovation work has been going on in that quarter, and that is ending now. On 15th of November, the first phase will get over, and the one part of that first phase will get over on first week of December. So that is one small hall. It's not small, sorry. It's a 7,000 square feet hall. That will come by first week of December. But the rest, all the spaces will be complete by 15th of November. Hence, because of that, we've not taken our major MICE groups, events, which we have as compared to before have taken. We have not taken all that because our main all things were renovating. Now we are obviously stopping the renovation, means not stopping. The right word would be pausing our renovation once this is done, and we will again take up the renovation in April, again in part, because so that the hotel operations does not get affected and revenue and cash flow keeps coming. The good news of this is that while there has been a dip in the revenue, the good news is that all this renovation and upgradation which we are doing has been through internal accruals, and the effect of this renovation and its things already being seen in terms of an improved ARR in the coming quarter. Our ARR for Pune Orchid is already based on the people come and they see the renovation what's going on. We have been able to close business at a better ADR for the future booking already. So we are, as we had planned that the renovation should pay off, that renovation will definitely pay off in terms of a much better, superior product. It will definitely be one of the top hotels in Pune, not only in terms of its size and volume of business, but even in terms of its class standard. So keeping this in mind, Pune Orchid also had dip, and that's how the thing has been. So this quarter, unfortunately, has been the perfect storm of a dip in revenue, subsidiaries not supporting each other, and again, this is primarily why Kamat Group wants to expand beyond Maharashtra and particularly Mumbai and Pune, so that you can deleverage its risk just, as a national hotel chain should. So that's why we are growing our portfolio and we have all these other properties coming about.
Yeah, fair enough. I think that explains well. So, in essence, I think, as you mentioned, one Chandigarh and then 5 other hotels that expenses are incurred in the Q2, which was not operational, right?
Yes, sir. Yes, sir. So in fact, one more thing I can mention to you why our Q3 will be better than last time, apart from the improved performance or as per normal that the wedding season and all that starts, or the Kaya dates start. The main one other thing is that last year, hotels which did not perform very well because they were new, like Jamnagar, like Sambhaji Nagar, Irabai Orchid Sambhaji Nagar, because of the expenses booked, as I mentioned before, on a performance basis they did good, but on a MIS basis they were in negative. But this year they have now started obviously paying themselves back in terms of their MIS performance coming in sync with what it should be because of the expense cover. So that now will also add value and compound to our
that is completely fair enough. I think the only thing was it was not explained in the investor presentation.
Yes, sir.
Of course, then I would like to meet you in person.
Yes, sir.
Definitely. And sir, one more question. In future strategy, that is, you have mentioned in the slide, KHIL 3.0, where, you have projected revenue of, say 400 crore. But looking at the H1, will you, revise your guidance downward, or the 400 crore remains intact?
No, sir. We based on what we see, based on what we have in hand, and based on what we see, we will stick to our guidance of 400 crores.
Great. That is music to our ear. So thank you, sir, for giving me the opportunity to ask the question, and would like to meet you in person also. Thank you very much, and all the best.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Krisha Kansara from Molecule Ventures. Please go ahead.
Hello,
Excuse me, Krisha. Yes, you're audible. Please go ahead.
Yeah. Sir, I have a question similar to the earlier participant. So you mentioned 2-3 reasons for this quarter's poor performance, monsoons and then OHPPL renovation, and then, of course, the expenses related to new properties. But if we look at the past quarters also, we already had these factors play out in those quarters as well. So reporting a degrowth even when we had new properties which were opened few quarters back, it is slightly disappointing both on the top line degrowth part as well as the impact on the margins part. So in this quarter, the employee cost also has seen a sharp increase. So could you please pinpoint on the primary reason for this degrowth? Of course, there are multiple factors, but if you could pinpoint on one primary reason for this kind of degrowth. And another question related to this is, as earlier participants asked about the guidance revision, so we reported close to 160 crores of top line in H1. So do you think that we will be able to meet our 400 crore guidance in the H2? That is my question. Thank you.
Sure. Krishnaji, definitely. I will again, based on if you look at it, our overall quarter on quarter, the employee cost has basically gone up by 1.5 CR. Okay. Primarily in this cost which is there, this is one of the examples of the reason that I'm saying that why the employee cost has gone up is because the pre-opening of a hotel is where the expenses does go up. It does go up. That you have to take now a general manager will join anywhere between 4 to 6 months before a hotel opens, sometimes even much before that, because he then is your operational and administrative in charge to set the hotel up. Excuse me. Of course, along with him, he is not alone. He needs a team. There will be a housekeeper, there will be a F&B person, there will be a chef, there will be various others who will all join as HODs. Along with them, there will be a pre-opening team who will come in. There will be an extra number of people as a pre-opening because there is a training element involved, there is a setup cost involved. Then let's not forget that all these people need to travel. So another large cost is travel. Today airfares are sky high. Each time we have to set up a hotel, like example in Hyderabad, the number of visits that were required, it's not now the catch-22 situation which you will appreciate is that neither are these employees who we are sending are so low in cost that they can afford to be sent by train. If someone's one day working is costlier than the airfare, then you will probably obviously calculate and say go by aeroplane. If it's somebody whose cost of salary is lower than a train, then you are lower than airfare, you will send him by train. So there is always a thing. So today, a lot of people are more and more traveling by air because the cost of their 2 day, 3 day in a train is more than the fact that if he catches a flight and reaches in 1.5 hours and starts working from the same day or whatever. So there are a lot of travel cost, there is a lot of employee cost, then there's a lot of marketing cost, there's a lot of digital expenses, all this which is required very much in advance for a hotel in particular. And that is basically why we see this kind of expenses in a pre-opening of a hotel. So one of the examples of cost which I mentioned to Vedaji is basically that this expense is one. Secondly, the subsidiaries, like I mentioned, Chandigarh, or like I mentioned, N-Hotel, these have had losses which normally would not have happened because also in a good time when a season kind of is there in Manali and other places, this road got washed away and we basically had a double hit. So revenue also disappeared and expenses also high. So that also impact we had. Then, so that was one like I mentioned. And then overall performance has been a dip, which I agree with you, that we have not performed as well as we should have. Even considering the monsoon and other parts, there has been a challenge in terms of our overall performance in this Q2. But all that said, I am very confident and I'm very sure of Q3 and Q4 achieving our target of 400 like we have already given. Otherwise, we would not put it because we know that you all will always hold us accountable to what statement we make. And that is why I reminded our listeners who have been, many of them, including your firm, following us over the last many, many years, that our strategy or our other practice, not strategy, our practice has been to always book the expenses of every pre-opening, not capitalize it, so that, we book all the expenses so we get a clear picture of performance and cash flow rather than anything else. And that is why basically we have a, transparent strategy rather than, capitalize it, which is not wrong. Both are correct. It's just that we have chosen to take this as our methodology of expansion. I hope this answered your query, madam.
So, of course, that is helpful. But in previous H2 of FY25, we reported around 200 crores of revenue. So, you're confident of clocking like 240 crores in this H2 to meet
so if I missed, last time in consolidated, we had 163 crore rupees in 2024, and we had this year we had 161.5. So we are not very far enough in general from our last time's thing, what you call last time's performance. And last time we closed at 360. We closed at 364.79. So if we look, correct, na Smita-ji?
Hanji, sir.
So if we look at our current 364 of YTD, And when we look at that, we are not far off in our H1, H2 compared to H1 compared to last time. Then definitely, if you extrapolate, madam, you will find that with all these new hotels coming, Hyderabad, unlike other hotels, Hyderabad is such a vibrant market that unlike other places where our hotels take time to stabilize and to come into a general operating break-even, Hyderabad in the second month itself will do it. It's that buoyant a market. So why will that not add to our top line and help our bottom line? So this is basically where I'm very confident of having 400 crossing and the YTD.
Sure. Okay. Thank you.
Oh, also, madam, just for your own calculation, you can take out the hotels which have done last time have opened mid-year and contributed to 364. So when you take them now for the full year, you will definitely see the value in the statement which I made of coming to 400 crores.
Sure. Thank you. Thank you, sir.
Thank you, madam. Thank you.
Thank you. The next question is from the line of Adi Verma from Synergy Finance. Please go ahead.
Yeah. Good morning, sir. Am I audible?
Yes, sir.
Yes, you're audible.
Yeah.
Please go ahead.
Yeah, good morning again, sir. So my question is, first of all, in the last phone call, there was a question regarding, that the valuation of the company is less than the other peers. And you said that we are giving a very conservative outlook and we will try to work on our goals and achieving further numbers. So clearly that has not happened this quarter, and I heard your explanation, which was quite satisfying. So just want to confirm that, sir, going further, do we see any surprises like this? And I'll place my second question also. Sir, in compared to your peers, I somehow feel the popularity is not as it should be. If you give an option to a tourist, which hotels they would like to go, Kamat Hotel's name does not appear very frequently. So are we working somewhere to improve our brand presence, the advertising, the popularity? Thank you, sir.
So, very good. The second one was an even better question. I'll come to the first part. If there is any surprise which we can see, then it won't be a surprise. So the whole point of a surprise is we will not know. But we can anticipate multiple challenges and we should work on that. For example, rain, nobody expected that it will continue till November. Nobody ever would have thought that, normally it is said that Ganpati ke saath wo barsat jata hai 15, 20, 25 September tak. And then October is considered a very hot month, very, very hot month. But this time it was raining like cats and dogs in Mumbai, in Goa, in various places. So, we cannot foresee, but we can anticipate and keep planning. For that, what we can do, one is have cash reserves so that if tomorrow some tragedy comes or some challenge comes, we should be able to continue smooth functioning. We should be able to have transparent HR policies so that our people don't jump ship on a small whimsical thing. Today, that is one of our strengths which is there. So definitely we are scanning always to see what can be always as a threat for us. Now, when Donald Trump does certain nonsense, then automatically, we also have to see from our own perspective. Nobody expected Operation Sindoor to happen. But once it happened, what all did we do? How did we support our, industry, or how did we support our nation? So these are like what we did in Kamat Group was we said that if any, particularly Chandigarh and various locations where our hotels were there, we had already floated that if any time any problem is there and if you need a shelter, you please come to our hotel which is nearby. And we had kept arrangement if anyone comes, that time there is a place for them to sit and all that. And we have some basic necessities as a emergency would require, including first aid kit. So these are all things which we can max to max do. So surprise-wise, we are scanning, but if it's a surprise, I know then it's not a surprise. Coming to the second part of popularity, sir, this is a constant endeavor and a struggle of every organization. Even a big brand, global brand, Indian global brand will struggle in a foreign country to establish itself. And we also, depending on our different brands, struggle in different places. Okay, even if just because we are Kamat and we are famous for our food, it doesn't mean we should take anything for granted. So we do constant marketing, we do constant there's marketing is there, then our Orchid Rewards program is there, which has more than 10 lakh members. Members come through that. Then we have a sales team of our own. We rely very limitedly on online travel agents. Very candidly, I must tell you that they are our partners, but you should never allow your partner to become dominant in your thing. Even a good husband-wife has to be in balance. You cannot, I cannot dominate my wife should not dominate me. We have to be friends and partners, means equal. And that's why in our case also, generally we keep our OTA business at around anywhere between 30 to 35%. In some cases, in smaller hotels, it may go up to 40. But the rest of the 60 has to be filled up by our sales team. We have a sales network across India of our own. We have a sales team of 45 people of our own, not just, outsourced or as in terms of to OTA ki aap bhar dalo, ya aisa kuch. And they basically go to travel agents, they go to the thing. So we have, a strong network where we should be getting the sales from a network of, which is our own allied network. So keeping this whole thing in mind, growth and visibility is a constant thing. That's why we also do various other marketing activities. We do, by the way, a lot of social activities. This also adds to our image. So in newer markets, we definitely are known but not well known. So for that, in every market, nobody knew us 20 years back in Orissa. They just knew, ek koi Kamat hai, Bombay se aaya hai. But today we are an integral part of Odia society, Bhubaneswar, and in Bhubaneswar, in various other parts of Orissa, Konark, Puri, and even others, not just there. Today we are known as a brand and we are known. So every place we go, we will exactly have to struggle like you have suggested, Adiji, and we have to make our mark.
Thank you, sir. We are long time with Kamat Hotel and we wish you all the best. I hope you progress. And we progress.
Thank you, sir. No, sir. I really respect your patience and I'm sure your patience will be rewarded. I'm working towards that. Thank you, sir.
Thank you. The next question is from the line of Amish Kanani from Knowise Investment Managers. Please go ahead. Excuse me, Amish. Excuse me, Amish.
Can you hear me?
Yes, you're audible. Yes.
Yeah, sorry. Yeah, sir, so you can explain the increase in expense and, the hotels in Manali and, Shimla being the reason for lower margins. If you can split between the two, sir, I can see the expenses have increased by 5 crore and the top line has decreased by about 10 crores on a YOY basis. So is this fair to assume that this entire 10 crore fall is largely coming from a decline in revenue from these Shimla and Manali, and that explains the 15 crore change in EBITDA?
No, sir. They are just one of the reasons amongst many other reasons. They are one of the subsidiary, and Hotel is one of the subsidiary of Kamat Hotels. As I mentioned, and I'll just repeat for the sake of your the thing, is Envotel, Sunday Hospitality, OHPPL, all of them together, and Kamat Hotels itself. All of them this quarter have not performed in terms of either top line or in terms of their EBITDA. That is basically the main thing. So it's not too fair to blame only one hotel. It has been a collective overall dip of ours of Q2.
Okay. So say Manali and Shimla put together, what was the revenue loss for this quarter, if it all is quantifiable?
Pitaji?
Was it?
Sorry, sir. Boliye.
Yeah, I'm saying Manali and Shimla put together, what is the quantum of loss? Is it more than 5 crore or even less? Maybe we can calculate the rooms and, IRR and we can calculate it, but just in case, we have a ready number so that we understand the sensitivity of these property to that overall number, sir.
Smitaji?
Yeah, it is coming, Shimla Manali contributes 3 crore rupees.
3 crores. Okay, sir. We got it. A balance is spread across maybe few properties where the, So, sir, in general, third quarter is very, very, high for us. And, there actually last year I saw our margins were as high as 40%. So, one, is it that, if we end up surpassing last year's number, the margins also would be similar or more?
So, sir, basically, in terms of on a YOY basis, it would be somewhat fair to take the same assumption of the thing. But considering that Q2 has had this 10 crore dip, we must factor that in also in all fairness. Okay, so while factoring that 10 crore fairness, based on last year's, you can calculate.
Sure, sir. And sir, we saw. Okay, sir. And sir, we have withdrawn the merger proposal that, that property that, we were intending to merge. And, you were mentioning in the past that was a good property. What was the reason for, sir, this withdrawal of this proposal? And I think there is some one-time income there. So if you can explain that transaction and why could we not, merge this property with this company?
Mitaji?
Hanji. So basically, sir, this merger has been withdrawn on 3 reasons. One is there is an uncertainty about when the statutory authorities are going to give us the approval on that, because SEBI itself has taken more than 13 months for the approval. Apart from that, BSc, NSC and NCLT was there. So it was prolonged and delay procedure. That's why we have taken a call that we should, in the interest of everyone, we should have to withdraw the things.
Sir, in the past, we have seen companies, not getting approval maybe 1.5, 2 years, but still they end up, merging if that is in the interest of company and the minority shareholder also. So it is a bit surprising that, just, within the 13-month period, it is, expected. NCLT sometimes take quite a bit of long time. So, it's a bit surprising that, we are withdrawing this, so early, relatively, I'm just saying. But yeah, that's an observation, sir. And sir, that was not, it was, the progress was not updated on time. But maybe, board has their own reasons to not do this. Yeah, sir. So thanks a lot, man. Thanks.
Thank you. The next question is from the line of Sanchit Agarwal from Ratnabali Equity Private Limited. Please go ahead.
Hello, am I audible?
Yes, you're audible. Please go ahead, Sanchit.
Hello?
Yes, please go ahead.
My question is that currently we have 2,100 operational rooms, and given that the FY2026 target is 2,500 rooms, and your presentation shows that in the pipeline there is just one hotel that is expected to come in this year, which is for 50 rooms. So what is the roadmap to reaching the 2,500 rooms target?
Thank you, sir. So basically, one of the things is that some of our properties have got delayed, which were in our pipeline of 2,500 rooms. We also have to work with our owners who are developing, since we are the plus and the minus of an asset-light model is that in the downside is that you are dependent on the owners. Sometimes their cash flow, their operational challenges, or sometimes it is just bad luck. Like in the case of Bhavnagar, it's just bad luck that there was a fire in Rajkot, which was a tragedy, and that basically clamped down on many of you who may be aware. You must have heard this before in other calls also. Not only related to hospitality, but real estate, hospitality, many. That for 10 or 11 months, the government of Gujarat did not pass a single approval because they were revising the entire DCR rules for development of buildings in Gujarat. So 11 months, literally everything came to a standstill for many people. Now that's why I cannot hold it against my owner, because for 11 months he also, being a noted builder and a real estate person of Gujarat, he could do nothing. So 11 months it got delayed, and when it started, that time again you have to start from scratch in terms of deploy, do everything. Then many things have changed. Now some improvements came about which we gave further modifications. So what we were expecting to start, unfortunately, has got delayed. Similarly, in the case of Dehradun should have opened 6 months from the. It should have been opened by now, but this got delayed and it has gone into March, April broadly. Similarly, Nashik, our owner is there. It's a management, Orchid Hotel Nashik. By the way, Dehradun is approximately 90 odd rooms. Nashik is 50 odd rooms. 60 approximately rooms. That has also got delayed. We are trying to push fast because of Kumbh Mela coming over there. That's a management property. So that got delayed. Bhavnagar is a 60 odd room hotel. That is odd. So if you can see the 200 odd rooms I have mentioned just now, only 200 odd in this 3 people. So this 2,500 coming to, apart from obviously what is mentioned to you, we are also having discussions because there's a lot of months left, and new other hotels are coming in. We had never mentioned about Orchid opening, Kamat Group opening Ira by Orchid in Porvorim, which is a beautiful, nice business hotel at Porvorim Junction, and it's the Ira by Orchid. And that suddenly came about, and that added to our target of 2,500. So like this, there are certain things in pipeline. It will be more appropriate for me to share once the signing has happened rather than to share any speculation. But there are in multiple places more such things going on. Some will be operational, some will be to be operational, and that's how we are expanding our portfolio. So we are quite confident that this target of 2,500, we should basically, if not cross it, we should come close to it, considering we have 5 months more and various discussions in pipeline are happening.
Okay, thank you for the detailed answer. So my next question is regarding the wedding demand that across Kamat hotels that we have potentially received. So
yes.
in comparison to last year, what is the wedding demand that we have received? And also, if you could just also elaborate on the wedding demand on some of the newer hotels that you also inaugurated, because I think you mentioned in the last con call that the timing might be such that you might not be able to capitalize on the entire wedding demand for the newer hotels.
You're absolutely right. And see, weddings are pre-planned ideally, and because of that, there's a lag of at least anywhere between 6 months, 9 months, 5 months, whereby someone decides to, as a family, join together and then they scout for places. Now, since we opened in the season, some of our hotels like Panchgani, the Orchid at Panchgani, while it has got some wedding, it has not got a lot of wedding, like our other hotels like Orchid Pune or like how our Orchid Mumbai have got a lot of weddings planned back to back. So this is another reason why next year particularly many of these will have a bigger kicker in terms of their performance, because those also BOPs as in business on books will build up. So wedding demand, while it has been buoyant for the industry, hotel to hotel, it is differing in its impact. So Rishikesh also has had a limited number of weddings frozen in Rishikesh because, like I said, we've just opened now, and that's why basically the weddings mainly are more coming on our books from the month of February, March, that way. So weddings as a demand in the industry is still buoyant. As in terms of our hotels, it is new hotels are having a slower demand, older hotels are having higher demand.
So for the older hotels, as compared to last year, would you say there is the demand, wedding demand, or say inquiries are more as compared to last year?
See, inquiries are not important. Sorry?
I'm saying only for the already established hotels. For those hotels, is there a higher wedding demand compared to last year?
So frankly, the number of inquiries particularly are not important. What is important is qualitative inquiries. There are many people who call us saying, "Aap kya shaadi karna hai?" But does he have the mental? If we might have the actual money, but does he have the mental ability to say, "No, this ARR I'm willing to spend. This is the kind of budget I have." So it's not about how many queries we generate. It's very important in terms of how many we do as a closure. And not all queries can be entertained. Most people call for very funny rates. I mean, and we cannot entertain them. I'd rather be empty than to do cheap Charlie business because that's not my profile. So again, hotel to hotel. In some other hotel, we will compromise and we'll give. So it depends on whichever the hotel is, what type of hotel it is, and the season also. There have been hotels like in off season, which is not a wedding season, but somebody is getting married in a non-wedding and says, but mere ko ye rate chahiye. That time we also see, khali unne se acha, we must have that traction with us, and then indirect income bhi aa jaye. So I think the number of queries is not an ideal way to look at. Number of closures would be, and within that I can say that our SIA dates, which are the main dates, our SIA dates for our older hotels are full.
Okay, that's very good to hear. Thank you so much, sir. That's all from my side.
Thank you. The next question is from the line of Gurvinder Zuneja from Fortuna PMS. Please go ahead. Excuse me, Gurvinder. You there? Gurvinder? Excuse me. Please rejoin the queue. Hello, you there?
Yes, I'm there. I'm
Okay,
so sorry. My voice is not getting through.
Please go ahead.
Thank you, sir, for allowing me this opportunity. My question was on the merger scheme withdrawal as well, which has already been asked. I just wanted to clarify, has the withdrawal been at the instance of the two...
Sorry to interrupt, Gurvind. Your voice is coming low. Can you...
Yes, you're right. I was going to ask him the same thing.
Sorry, sir. I'll try again. Hopefully this is better.
Yes, it is better now. Please go ahead.
Yes. Sir, my question was about the merger scheme withdrawal. Has it been at the instance of the two merging companies or at the instance of Kamat Hotels?
It is mutually discussed and decided based on many other aspects which we had discussed. One of the things is basically, as Smitaji said, we didn't want that overhang because from 2 years, and that overhang also causes uncertainty, because of which we did not want, we basically, a lot of people had questions: when it's happening, when it happens, what the effect, what will be the shareholding, how it is happening, what is happening. So it was basically a mutual thing based on not having visibility in terms of the timeline. Correct, Smitaji?
Hanji, sir. Correct.
All right, sir. Thank you very much.
So just to answer your question, one part of the question which you not asked, but I thought I'd mention, is that now, Smitaji, our shareholding and other things of Kamat Hotels as of now means, because now is withdrawn, will remain what it is only, right?
Right, sir.
So that clarity I would like to give you, Gurvinder ji, that now there is no uncertainty or any doubt in terms what it is right now. Thank you.
Okay, sir. Thank you very much.
Thank you. The next question is from the line of Ronit Kapoor from Investire Investment. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I had a question, like the company has a few land parcels that's in the annual report. We have some in Badi, in Kottayam, and there's, I think, adjacent parcel to a Pune hotel. And I think the promoter entity also has a structure in Nagpur, like Plaza Hotels. So does the company plan to exploit these to make hotels, and what is the timeline for this?
Good question, sir. Let me start with the Nagpur property. The Nagpur property was sold long back as part of in 2022. Correct, Smitaji? 22, 21, 22, when we did our entire restructuring, that time to raise funds and to have internal accrual to put up our side and to bring down the debt, we had already sold Nagpur. So Nagpur is no more there, sir. And if it is in our current balance sheet, then Smitaji, please look at this point. Okay, it might be in one of maybe older...
saying about the promoter entity has, right? Like Plaza Hotels.
No, it's all sold. It is all sold, sir. It is all sold because at that time we, in 21, 22 to come out, the promoter has sold a lot of things to reduce the financial burden on the company. So it has been sold and it was part of the structuring which happened, and that's why today we are out of the problems of the past. So the promoter had to sacrifice all those things and he was willing to and happily doing it. Coming to, sir, your Kottayam, which is owned by Kamat Hotels India Limited. So it is a nice property, but the company currently does not have any plans to put capex on Kottayam. We will see what to do with it, but as of now, it has not having any plans to develop that hotel. Right now, there's a lot of much better opportunity in hand in in terms of what it's already doing. Orchid Pune is there. Various other properties are there, expanding from internal accrual with where we already have revenue rather than start a greenfield and look at it. So we aren't developing that particular property. And regarding the Pune land which you mentioned, yes, there is a Pune land which is there. For that, the company is already in discussions and taking the ideas and the discussions from various people who have already shown interest. And soon there will be some conclusion that we will share. When there is a conclusion, then we will share accordingly. But yes, we would like to monetize whatever assets we have so that it helps us further.
And what about Badi one?
Where is Badi, sir?
Himachal.
Acha, Baddi. Sorry, sir. Baddi one. No, sir, not your thing. Baddi also, Smitaji, sold, na?
Yes, sir. It has been sold.
So, yeah, that was with Kamat Hotels, and it has been also sold as part of, the need at that time.
Okay. And one more thing was like this Lotus Konark, the lease I think is expired as per the disclosure. So any update on that, like extension, and what would be the new lease like? With the same price or be
So, sir, it's the government of Orissa property, and the lease which has expired, that, have due to various reasons, they have supported and extended because there was a cyclone, and then that force major time we could not use. Orissa keeps getting cyclones and all. So there are various things. At the appropriate time, once, the proper thing is done, then we will update accordingly. As of now, it is as it is.
So extension is expected, or like what do we assume?
Yes, extension is definitely expected. We definitely, because we have performed exceedingly well for the government. We have performed not only in terms of reputation, but even in terms of revenue for them. So also we have more than stuck to our ethos. The whole idea behind giving this property was to a person who is from an environmental hospitality background, because it's in an environmentally sensitive zone. And today it is one of the Odisha government's most prime poster for showing the kind of sustainable tourism. Every single guest, in fact, you'll be very pleasantly surprised to know, even the Rashtrapati himself was very keen to come and stay here. And while he could not, when he had come to Konark, and unfortunately due to certain reasons, there's a bridge over there. That bridge is not allowed as per protocol for the Rashtrapati to travel on, because of which, because it's an eco-sensitive zone, there's a wooden bridge. While that wooden bridge is very safe and even a tempo can go on it, there are government protocols for the first citizen, and that is why, he could not distinct. But that's the kind of touchwood popularity that Odisha government is proud of, and we are very grateful to their support. And this will remain, like I said, a renewal process which happens. They will do it.
Okay. And last question is like on this area Orchid Mumbai. So now the company's financial condition has improved a lot, Kamat Hotels.
Okay.
So I want to say, like, we had got the lease at a quite expensive, like 21 crores you're paying annually, and it's getting 50 crore turnover. So given that now doesn't, like, I think this is also affecting our EBITDA margins if I see on an overall basis. But doesn't it make sense to convert it on management and pay 20 crores for a higher revenue hotel like 120 crores in some other city?
It's a very pertinent point, sir. On these lines, we are already working. We are waiting for our thing to finish, which will finish now. And then based on that, discussions are on with our owners. Let us see, sir, how it fructifies. We are, touchwood, having very good relations with our owners. And that is why, basically, we are waiting for this thing. So once the discussions happen, that time we will have but your point is taken. Actually, it's not just taken. I'm glad that it's came from you, because we also have some similar thoughts. Let us see, sir, how that pans out in the time to come.
Okay. Thank you. And lastly, like on the future expansion, like I feel like Kamat Hotel has, like over the years has 100 plus room hotels, but your current trajectory is like 60 rooms. So that's not letting the company utilize the optimum EBITDA margins, and even the brand image are not being enhanced because of that. So the hotels get lost in oblivion because of that fact. So I think if you, in the future, the company takes larger 100, 120 rooms, it would help the brand as well as the EBITDA margin expansion. Right? So any take on that?
With you. I'm totally with you. Right now, basically, the company has many a times taken the opportunities that, it got presents in front of it. For an example, I would be more than happy to have a 150 room hotel in Sambhajinagar, but unfortunately, we have not got that opportunity. But what we got was basically 33 room era, which is doing exceedingly well and is today extremely well known, one of the top in terms of its in its segment performers in Sambhajinagar. So what you said is definitely something which I subscribe to your thought. But whatever opportunities based on we get, rather than reject or not do, if it makes sense in terms of a larger network thought, then we are doing. Otherwise, we are rejecting. So in all fairness to my team, many a times their performance is affected because I say no. Exactly on the lines of what you said, I tell my team no, because either it has to add value in my network or it has to add value in my bottom line. So this way, we have been working, and so the team gets us many more opportunities than what actually we close. But I want either it to give me revenue, like you mentioned, or it has to enhance in terms of our value. So those have not been, then we don't take. But Sambhajinagar, for example, was something which helped tremendously our sales in Maharashtra in general, because a lot of people have factory in Sambhajinagar and their offices in Pune. For example, Skoda. Skoda head office is in Pune, not in Mumbai, but the factory is in Sambhajinagar. Because of that, business of ours has gone up, because now that we have this small property in Sambhajinagar, the connectivity with Skoda team and the other aspects has gone up. So this is a small example I can give. There are many other companies who we have benefited from our small tie-up of this. But if I get, by God's grace, a hotel over there with more keys, I'm ready for it.
Okay, thank you. That's it. All the best for the future. Yeah.
Thank you, sir. Thank you.
Thank you. The next question is from the line of Abhijit Singh as an individual investor. Please go ahead.
Hello. Am I audible, sir?
Yes, sir.
So, sir, my first question is, the numbers are way off the mark. If you look at the monsoon and other things, our peers have grown decently well, and we have approximately 250 room additional compared to H1 of the last year. Like we have Chandigarh, we have Noida, we have Goa properties. So the number doesn't look good on the year-on-year basis comparison, because it's additional. We have approximately 20-30% more rooms, but in the revenue terms we have declined 15-20%. So first question is this, and the second question is that you have, and publicly you have many times you have reiterated that the land parcel that you have you want to merge have appreciated in the price significantly. But in the end time, when you are saying that we are not merging that, so it doesn't look good. It raises a question on the corporate governance. So that's the second question. So if you can answer the.
I will take your second question, sir, because the first question I've answered multiple times. So I think that I think you may have joined in late, but I will answer the second question, which is very much more important, because I understand this is also one of the things that we did discuss, that the optics, as you mentioned, it looks like that, but it is not the case. What you have asked about basically in terms of the value or the appreciation or the other things, the value and appreciation basically is all notional. Ultimately, the whatever would be based on the actuality. We have not done any land to sell or to this thing where suddenly the great value would thing it. It is basically that whatever the merger scheme was there from last 2 years, and this is not something new. Everyone was well aware from long time that whatever is happening and whatever is coming, So it's not that we did not know Vadwan will come someday. Everybody knew. But unfortunately, the point is that the length of the thing is so long that today our share price, okay, based on our performance, let's talk about first the performance part again now to come to the first part. Many of my previous colleagues, or rather your previous colleagues, have asked, will you do 400? Now, even if I do 400, it is affecting our overall, shares and other things in terms of that, okay, uske baad se merger hoga, merger ka. If my investors don't have clarity in terms of what is forward, then that overhang of 2 years, I don't think is fair to them also. How much can I also, test anyone's patience? Ki baba, aage kya? Because many times people would ask, then uske baad kya ho raha hai, iske baad kya ho raha hai. So better we thought is that when we discussed it, that baba, this is taking too long, and it is not because of us, it is because of all the statutory bodies. Better is that we just do the needful in terms of, at that time whatever, this thing is there, we'll see. Overall, your point is very, very valid. This was also discussed that it might look bad in the optics, but I have to ultimately do whatever best, can be for everyone. And that basically includes, us having no overhang and all this kind of, thing which has been going on for 2 years. That's basically it.
Okay, sir. But with all due respect, sir, I want to make a point that if you say something in the public forum and you don't implement that, then it doesn't look good, because we don't have the kind of reputation from the past experiences that we had. We had gone to NCLT, now we are doing this, so it doesn't look good.
No, sir. Let me clarify to you. We have never gone to NCLT, sir. Huh? Let me clarify to you. We have never gone to NCLT. So our reputation in terms of NCLT, yes, we were defaulters, but we were never NCLT. So that misguidance whosoever has given you. And secondly, sir, let me tell you that our reputation in terms of today, the same banks who once upon a time have, put us as defaulters are today waiting with 1 foot when we will do business again with them. It is that we are loyal. And we have not moved from Axis Bank because they supported us and they done it. Otherwise, sir, today, many people are more than keen to tie up with Kamat Group because of, sir, a kahavat hai. जब बरसात है तब छतरी लेके जाता है और जब बरसात नहीं है तब छतरी लेके आता है. अभी कौन छतरी लेके आता है क्या है वो सब अलग बात है, बट इम्पोर्टेंट है कि गरज के हिसाब से वो है. So point is that let me share with you our reputation in terms of how we have dealt. We have done exceedingly well with every single lender of ours, and today we have a stellar reputation and a stellar faith from them. And many of them would be more than keen to take us back. It's just that we basically from our entire settlement have now come down to today 90 odd crore rupees, 90 something. And by this year ending, we should be more or less at 88 crore rupees. And we are with Axis Bank because they have supported us and we are grateful to them.
Okay, sir. Thank you.
Okay. Thank you, sir.
Thank you. The next question is from the line of Virat Shah from Tatwik Digital Analytics. Please go ahead.
Yeah, hi. Thank you for the opportunity. Sir, my question is regarding the occupancy rate. So, if we see in this quarter, the occupancy for Orchid and Era both has fallen drastically from the historically what we have seen in last 2 years. So my question is, apart from the reasons that you mentioned for the Simla hotel and for the Chandigarh and Pune hotel, so are there any other structural reasons that you are seeing in your other hotels because of which the occupancy rate has fallen to 47% in Orchid specifically from 66% in last year's quarter? And anything that you can foresee in terms of if this will continue or if you can see any substantial improvement in November and October? Yeah.
So, sir, the whole thing, that's why, sir, what you said about 46%, this is brand-wise, as shared with you. And this highlights what my point was. Sir, today, Himachal Orchid, Shimla Orchid, is 98 rooms. And our Manali Orchid is 48 rooms. 45 or 48. मोटा सर 50 and ये तो आप मानते चलो 150 रूम एग्जाम्पल. तो मोटा इजी मैथ करने के लिए सर आज 150 रूम जो है ये है जीरो ऑक्यूपेंसी था उस टाइम पे, मतलब एज गुड एज जीरो ऑक्यूपेंसी. इनफैक्ट मनाली वॉज जीरो फॉर मोर देन शिमला. Manali was zero occupancy for 3 months, 2.5, 3 months, and Shimla was for 40 odd days. Now, sir, when the occupancy is zero, mathematically, you calculate and you see that even though Orchid Mumbai is 372 rooms, and against that, and at 90% pakad lo, suppose they are 70% pakad lo, you do any math ratio. The minute the opposite side 150, as a brand, when we are given the thing, has dropped the whole on one side, you find this drastic drop, which is exactly why our revenue also and our this thing also shows that drop. So brand-wise what you have seen is correct, and it is exactly that because of certain hotels drastic having a drop like Shimla, Manali and a sizable 150 in considering that the total base of Orchid number of rooms which is there would be I think around almost 1,000. So when you have 1,000 may say 150 rooms, suddenly you will find this massive issue. So definitely that's why you see this 47.
Got it, sir. Understood. Very clear. And sir, also, so basically we can keep in mind that the room occupancy rate for the other hotels apart from this 3 hotels, Simla, Manali and Pune, as you said, we can assume that the occupancy was near or more or less in line with our previous quarters.
No, there was a dip. That's why the revenue, there was a dip in the quarter also. In our hotels like Orchid Mumbai and Era Mumbai, okay, so there was a dip in our overall occupancies also. That is why cumulatively we've had this whole challenge in the this thing. So it's not only in terms of your Shimla Manali, though that has been the major reason. The major reason has been that. But even if they would have been normal and if the hotels would have performed the way they have performed, let's assume that whatever they have performed, they performed. But if today Manali and Shimla would not have, example, been so drastic, we would have still had a much better quarter. So that is basically the point.
Understood, sir. And sir, do you see any improvement in October and this 10 days of November in terms of occupancy?
Definitely, sir. Definitely.
All right. Yeah, that was all from my side.
Thank you.
Thank you very much.
Thank you.
Thank you. Due to time constraint, that was the last question for today's conference. I now hand the conference over to management for closing comment. Over to you, sir.
So, thank you, everyone. I have one second with me. So, thank you, everyone. I really appreciate the questions, and I hope we have answered them satisfactorily. While I do still am the thing that the quarter was not good, definitely Q3, Q4 will be much, much, much better. And if you have any further questions, we are here. Many of you do reach out to us, and we do answer, and we do meet. And also, if there's any other things where you would like to just have general questions or some thing, please do reach out to our IR partners, Valorum Advisors, and we will definitely do the needful on your queries. Thank you, everyone. Thank you for your patience and being on part. Thank you. Namaskar.
On behalf of Kamat Hotels India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
If you found this video helpful, please like, share, and subscribe to Concall India for latest upcoming Concall.